Welcome, everyone, to our deep dive into Axis REITs. Looks like some of you are interested in this steady price decline it's been having this year.
Yeah.
Even though the yield seems, well, pretty decent, like 4.68% at RM 1.71. So we're going to unpack that today.
A bit of a head scratcher, isn't it? The yield does seem attractive,
Right.
especially considering the NTA of RM 1.6158
Right.
and the DPU of 8 cents. But yeah, something is definitely making investors a little bit, well, spooked, I guess.
Okay, so today we're looking at Axis REIT's recent performance.
Right.
Their financials from the third quarter of 2024, their portfolio. And we're even going to take a peek at how they compare to some of the giants out there, like IGB REIT and Sunway REIT.
Yeah. By the end of this, you should have a much clearer idea of what's causing this price drop, and most importantly, whether Axis REIT is still a good investment.
Sounds good. So let's just get right to it. Like, why is the price going down if everything seems okay?
Right. It's like if the numbers look good, why is the price dropping?
Right. Yeah, maybe the market knows something we don't.
Maybe. Or something that hasn't been priced in yet.
Exactly. And, let's not forget, the Employees Provident Fund Board just bought 500,000 shares. November 27th, I think it was.
That's interesting.
They did to make pretty good investment decisions, so that's interesting.
Right. Yeah. They're known for making pretty solid choices. Makes you wonder what they see that maybe others don't.
Yeah. Okay, so to understand this a little better, let's look at their third quarter financials for 2024. So revenue climbed to RM 288.41 million,
Okay.
driven by new leases and some acquisitions. And their net income after tax went up by 14.4%, reaching RM 217.8 million.
All good signs, right? Don't forget, we also had a revaluation gain of RM 81.3 million on their investment properties. Maybe the market's just undervaluing their portfolio.
Right. But aren't revaluation gains, they're not always like a sure thing, are they? They don't always mean like cash flow.
You got a point there. It's basically like a snapshot of how the market sees the value of the property.
Right. At a specific time. So, okay, so maybe we shouldn't read too much into that.
Yeah, agreed.
And then there's the private placement, too. They finished their ninth one in January, raised RM 175 million at RM 1.75 per unit.
Oh, yeah. That sparks some debate, hasn't it?
Right.
Some analysts see it as like a good sign. Like institutional investors are confident, but others are wondering if it might have diluted things for the existing unit holders, especially since it was done at a slightly lower price than the market price at the time.
Right. Raising capital can be good for growth, obviously, through acquisitions and things like that. But you have to make sure it doesn't hurt the existing unit holders.
Right. It's a balancing act.
Right. Finding that sweet spot. Okay, so let's shift gears a little bit.
Yeah.
And take a look at their portfolio. What's the story there?
Well, their focus is industrial properties, specifically logistics warehouses. And, that sector has been booming lately thanks to, the whole e-commerce thing.
Right. Everybody buying everything online. But, are things changing a bit now? Or are people going back to, like actual stores?
Yeah, that's a good question, actually. Things might not be growing as fast as they were.
Right.
But for now, the demand for warehouses and logistics, that's still pretty strong.
Okay. Good to know. And where are most of their properties? Are they all kind of concentrated in one area?
Most of them, like 97%, are in Malaysia.
Okay.
They do have a tiny bit, about 3% in Australia.
Okay. And, we know their occupancy rate is really high. It's 97% in 2023.
Yep.
Which is up from 95% in 2022. Pretty impressive, right?
Yeah, that is impressive, especially compared to the overall market. It's a good sign of demand, a high occupancy rate. There's always a but in investing. You have to look at who the tenants are. Are they too reliant on one tenant or one industry? Because that can be risky.
Right.
If that industry has problems.
Like all your eggs in one basket kind of thing.
Right.
But they do seem to have a pretty diverse tenant base, don't they?
Yeah, from what we've seen, it does seem that way. But to really understand how they'd handle any economic shifts, we'd need more detailed information on their tenant mix.
Right. Okay. Something to keep in mind.
Definitely.
So we've looked at their financials.
Yep.
Their portfolio. We've talked about the tenants a bit. What else should we think about when we're trying to, figure out this price decline?
Well, I think it's important to look at their management strategy and their acquisition approach.
Okay.
They're really big on planned preventative maintenance, make sure their properties are in great shape, helps maintain their value over time, and they really value their relationships with their suppliers and contractors.
Okay, so they're like really organized and paying attention to the details.
Yeah, pretty much. And their commitment to sustainability is pretty remarkable. They've secured, get this, RM 490 million in sustainability-linked financing. That's like 31.5% of their total financing. Shows they're serious about ESG, integrating it into everything they do.
That's really interesting. And that's good, not just for, the planet. It's probably good for their bottom line too, right?
Yeah.
More and more investors are looking for that.
Yeah, absolutely. It's almost becoming a requirement for many investors. And as for acquisitions, it seems like they have a lot of potential properties in the pipeline,
Huh.
always looking for good deals, yields. And actually, starting in Q4 of 2023, they started adding ESG considerations into their due diligence,
Oh,
looking at climate risks, recycling, how close potential properties are to public transportation, you name it.
that's impressive. But I mean, is this are they really committed to this? Or are they just doing it because investors are asking for it?
It's probably a bit of both, honestly. But I think the fact that they're going above and beyond shows a deeper commitment.
Okay, so to recap, their finances are sound. They have a strong portfolio that's growing. They're focused on sustainability.
Yeah.
Their tenants seem diverse.
Uh-huh.
But the price keeps going down. What's going on?
Yeah, that's the big question. And unfortunately, there's no easy answer. The market, well, it's complex. It's influenced by so many things. Sometimes, even when things look good, the market sees risks, and those risks can be more important than the good stuff.
Perceived risks, huh? Like what?
Well, the industrial REIT sector in Malaysia, it's growing, but it's also facing some challenges. Like there are worries about interest rates going up, and that could make it more expensive for them to borrow money for acquisitions and developments.
Yeah, that makes sense. Like all the economic uncertainty everyone keeps talking about. But what about e-commerce? I mean, that's been huge for industrial REITs, hasn't it?
Yeah, for sure. But even there, things are getting a bit more complicated. All this growth in e-commerce, it means more competition. And some analysts are starting to wonder if all this demand for warehouses is going to keep going up.
So maybe the good times are over for industrial REITs.
I wouldn't say that. Not necessarily. But investors are definitely being a little more careful. They're looking for signs that these companies are, well, resilient, that they can handle anything.
Resilient, okay. What does that mean for Axis REITs?
Well, we need to think about more than just their financials. Things like cybersecurity, how they protect their data, do they have a plan if something goes wrong? I mean, even one cyber attack could really hurt them and make investors nervous.
Right, yeah, those data breaches are happening all the time. So have they done anything about that?
Yeah, they have. They've got a pretty comprehensive cybersecurity system in place. They train their employees on data protection, and they do regular checks to make sure they're up to date.
Okay, so they're taking it seriously. That's good.
Yeah, that's essential these days. And it's not just about outside threats. They need to have a plan for if something goes wrong internally, too, like a natural disaster or something.
Okay, a plan B. Makes sense.
Right. Now, to really see where Axis REIT stands, we need to look at how they compare to their peers, the other big players.
Okay, yeah. Let's see how they stack up.
So we'll compare them to IGB REIT and Sunway REIT. Those are two of the big ones in Malaysia. IGB REIT owns Mid-Valley Mega Mall. It's one of the biggest and most popular malls in the country.
Oh, yeah. Mid-Valley. I think everyone loves going there.
Right. It's a prime location, tons of shoppers. Sunway REIT, they own the Sunway Pyramid, another huge mall.
Okay.
But they also have other types of properties in their portfolio, hotels, offices, even an education property.
Okay, so one is focused on retail and the other one is a bit more diverse. So where does Axis REIT fit in?
Well, their focus on industrial properties, especially logistics warehouses, that sets them apart. It's a different game, really. Different factors influencing things.
Okay, so are we comparing apples and oranges here?
Not exactly. Even though their portfolios are different, we can still look at things like yield, NTA, diversification, and how good their management is.
Right, the stuff investors care about. Okay, so let's look at the numbers. Yield first. How does Axis REIT compare?
Their yield is 4.68%, which is a little lower than IGB REIT, which is around 6.12%, but it's higher than Sunway REIT's, which is closer to 4.3%.
Okay, so kind of in the middle. What about NTA?
Axis REIT's NTA is RM 1.6158. That's lower than both IGB REIT and Sunway REIT, which are both closer to RM 2.00.
Not as good there. Does that mean they're overvalued compared to the others?
Not necessarily. NTA is just one part of the picture. You have to think about the quality of the properties, where they're located, and of course, their potential for growth.
Right. So it's important, but it's not the whole story. What about diversification? How do they do there?
Well, like we said, Axis REIT is really focused on industrial properties, those logistics warehouses. They do have some diversification geographically because of their Australian holdings, but in terms of sector, they're pretty concentrated.
Right, the eggs in one basket thing again.
Exactly. Compared to IGB REIT, which is all about retail with Mid-Valley, and Sunway REIT, which is more balanced, Axis REIT is definitely less diversified.
So higher risk, but maybe higher reward too.
Yeah, that's one way to look at it. It really depends on how much risk you're comfortable with and what you're hoping to achieve. A focused portfolio can do really well if that sector does well, but it can also lose more if things go bad.
Okay. High risk, high reward. Got it. Last thing on the comparison list, management. How are they doing?
That's always hard to measure, but based on what we've seen, their track record, their focus on sustainability, how they manage risk, I'd say they seem pretty good, competent, and forward-thinking.
So no red flags there.
Nothing that's obvious, but it's always a good idea to do your own research and stay informed. Don't just trust anyone blindly, especially when it comes to your money.
Right, good advice. Okay, so we've looked at their financials, their portfolio, how they're doing with their tenants, how they compare to the other big players. Are we any closer to figuring out why the price is dropping?
I think we have a better understanding of what's happening, yes. The market, well, it's always trying to predict the future. It's not just reacting to what's happening now, but to what it thinks might happen later.
So even though they're doing well now, the market might be worried about something down the road.
Exactly. And that worry can make the price go down, even if everything looks good right now. Think of it like,
Oh, an analogy. I love those.
imagine a ship sailing smoothly on a calm sea. Everything seems perfect. But the captain, he sees some storm clouds in the distance. He knows the ship is strong, the crew is good, but he also knows a storm could be coming.
I see where you're going with this. The ship is Axis REIT. The storm clouds are like the economic uncertainty, maybe some of the challenges we've been talking about.
Right, and the captain, that's the management team. They're getting ready for the storm. They're focused on sustainability, managing risk, acquiring good properties.
But the passengers, the investors, are getting nervous. They're wondering if they should jump ship before the storm hits.
Yeah, that's what we're seeing here. All that nervousness, it can make people sell their shares, and that drives the price down.
So even with a good ship and a good captain, the fear of a storm can make people panic.
Exactly. And it's up to each passenger, each investor, to decide if they trust the captain enough to stay on board.
Okay, so no easy answers. It's all about deciding what risks you're willing to take and what you're hoping to get out of it.
Right. That's what makes investing both challenging and, interesting.
Okay, so no easy answers. It's all about deciding what risks you're willing to take and what you're hoping to get out of it.
Right.
Okay, but before we move on, I want to go back to their sustainability stuff for a second.
Sure.
Could this actually be helping them, like making them more resilient in the long run?
Yeah, it's definitely a factor. Think about it. They're making their buildings more energy efficient, right?
Yeah.
Upgrading lighting, installing solar panels.
Yeah, that's smart, especially with energy costs going up all the time. Should save them some money too, right?
Definitely. Lower operating costs. But it's more than that. It's about attracting the right kind of tenants, too.
Oh, I see. Like tenants who also care about sustainability.
Exactly. It's like they're creating a community of businesses that share the same values.
Yeah, that makes sense. And those tenants, I mean, they're probably going to stay longer, right? They're happy with the space, their costs are lower.
Right. More stable tenant relationships, predictable income stream. Investors love that.
Okay, so sustainability isn't just, a trendy thing. It's actually strategic advantage.
Yeah, pretty much.
Right.
And it's not just the big stuff. It's also about how they manage their properties day to day. Like you mentioned, their operations manual.
Yeah, I have to admit, at first I thought it was, kind of overkill. But now I'm seeing why it matters.
A well-maintained property, it's just more attractive.
Right.
Tenants are willing to pay more.
Uh-huh.
It holds its value better over time.
Right. It's all about protecting what they have, making it even better.
Exactly. And their manual, it covers everything, safety, regulations, even the sustainability stuff we talked about.
Yeah, it's pretty thorough.
They're not leaving anything to chance.
Okay, so let's see if I've got this right.
Sure.
Sustainability is a real thing for them, not just talk. They're managing their properties really well.
Yeah.
They're focused on keeping their tenants happy.
Yeah.
Is that what's making them so resilient, giving them that long-term potential?
Yeah. It all plays a role, but the market doesn't always see it,
Right.
Sometimes it's focused on the short term, the immediate stuff, and it gets spooked by uncertainty.
So maybe it's missing the big picture.
Could be. And that's where smart investors can find opportunities. You have to look deeper, go beyond the surface.
I like that, like digging for treasure or something.
Yeah, kind of like that. But there's one more thing I want to touch on. There's cybersecurity and data protection. That's pretty important these days.
Yeah, no kidding. All those data breaches you hear about are scary.
Yeah. And Axis REIT, they're taking it very seriously. They have a whole framework in place. They've done reviews, updated their policies, trained their employees. They're not messing around.
Good. Because if they had a big cyber attack, I mean, that could really hurt them, right? Their operations, their tenants, their reputation.
Exactly. Cybersecurity is a big part of being resilient these days. Now let's go back to their tenants for a minute. That 97% occupancy rate is amazing, but we need to know more about who those tenants are.
Right, like what kind of businesses are they? What industries are they in?
Exactly. Is there too much concentration in one area? Because that could be a problem if that industry has problems. Back to the eggs in one basket thing.
Right, so we need to know more about their tenant mix.
Yeah. Unfortunately, we don't have that level of detail right now. We know it's diverse, but we don't know the specifics.
So that's like blind spot, right?
Yeah. It's an important one. If too much of their revenue comes from one tenant or one industry, that's risky. So we need to do some more digging, maybe their annual reports, presentations, analyst reports, things like that.
Okay, time to put on our detective hats again.
Exactly. But even without all the details, we can make some educated guesses.
Okay.
Based on what we know, their focus on industrial properties, high occupancy, their talk about diversification, I think it's fair to assume they have a pretty good mix of tenants.
Yeah, that seems reasonable.
No obvious red flags, but definitely something to look into further.
Okay, so let's talk about the people running the show, the management team, and their approach to buying new properties.
Okay, sure. Their focus on maintenance, that's really good. They have a dedicated team that makes sure everything is running smoothly.
Right, and we talked about how that keeps the properties in good shape, attracts good tenants.
Yeah, it's a smart strategy. But they're not just focused on what they already have. They're always looking for new properties to buy, things that will fit their strategy and make money.
Okay, so they're not just buying anything. They have a plan.
Exactly. And they're sticking to what they know, industrial properties, logistics, warehouses.
Right, that's their expertise.
And remember how they're incorporating ESG into their due diligence process now?
Oh yeah, tell me more about that. I'm really interested in that whole sustainability angle.
So they're looking at things like flood risks. Is there good public transportation? Are the buildings designed in an environmentally friendly way? They're really thorough.
Wow, they're going all out, aren't they?
Yeah, it shows they're serious about it, not just doing the bare minimum. They're buying properties that are good for the environment and make sense financially.
Which is also good for attracting those tenants who care about those things too.
Exactly. And they've made some big changes to their due diligence process. They're looking at things like flood risks, thinking about the future, trying to incorporate recycling and circular economy principles into the design of new buildings.
So they're thinking long-term, not just about making a quick buck.
Exactly. These changes started in Q4 of 2023, so it'll be interesting to see how it all plays out.
Yeah, I think it's a good sign. Shows they're paying attention to what investors and tenants want, trying to be leaders in that area.
Right. Now let's talk about their relationships with suppliers and contractors. That's important for any business, right? Having good partnerships.
Yeah, definitely.
And Axis REIT, they get it. They really focus on building good relationships with their suppliers and contractors.
How do they do that?
Well, they have this supplier code of conduct. It outlines their expectations, things like ethical behavior, fair labor practices, environmental responsibility. They're serious about it.
So it's not just about their own operations, it's about their whole supply chain.
Right. And they don't just tell their suppliers what to do. They work with them to help them improve their own sustainability practices.
Okay, so it's a collaborative approach, working together to make everything better.
Exactly. And that benefits everyone in the end.
Okay, so we've got sustainability, good relationships with suppliers, they're managing their properties well, and they're even on top of cybersecurity. It seems like they're doing everything right.
Yeah, it does, doesn't it? But the price keeps going down. It's a bit of a mystery.
It is, but we've talked about how the market doesn't always make sense. Sometimes it reacts to things that aren't even real.
Yeah. Sometimes those perceived risks, even if they're not really there, can be more powerful than the good stuff.
So maybe the market's just focused on the wrong things, missing all the good things Axis REIT is doing.
It's possible. That's why it's so important to look beyond the headlines to really understand what's going on.
Okay, so we've talked about how well Axis REIT is doing, their sustainability efforts, their relationships, their acquisition strategy, how they manage risk. It seems like they're checking all the boxes. But we still haven't figured out why the price is dropping.
True. But we've learned a lot about what makes them strong and how they might handle any challenges that come their way.
So what's next? Where do we go from here?
I think it's time to see how they measure up against their peers, the other big players in the market.
Okay, yeah, let's compare them to the competition.
We talked about IGB REIT and Sunway REIT earlier. They're two of the biggest REITs in Malaysia. IGB owns Mid-Valley Mega Mall, one of the biggest and most popular malls in the country. Sunway owns Sunway Pyramid, another giant mall. But they also have a more diverse portfolio, hotels, offices, even an education property.
Yeah, Mid-Valley and Sunway Pyramid are like landmarks. Everyone knows them. But they're focused on retail, right? How does that compare to Axis REIT with their industrial properties? Are we even talking about the same thing?
Their portfolios are definitely different. But even though they're in different sectors, we can still compare them on some key things like yield, NTA, how diversified they are, and the quality of their management.
Okay, those are the things that matter to investors. So let's break it down. Yield first. How does Axis REIT compare on that?
Axis REIT has a yield of 4.68%. Remember, we talked about how it's a little lower than IGB REIT, which is around 6.12%, but higher than Sunway REIT, which is around 4.3%.
Okay, so they're right in the middle. What about NTA? How do they look there?
Their NTA is RM 1.6158, lower than both IGB REIT and Sunway REIT, which are closer to RM 2.00.
Not so good there.
Yeah.
Does that mean they're overvalued compared to the others?
Not necessarily. NTA is just one piece of the puzzle. You have to look at the quality of their properties, where they are, and their potential for growth, too.
Right, okay. So we can't just focus on NTA. What about diversification? How are they doing in that area?
Well, we talked about how Axis REIT is really focused on industrial properties, especially logistics warehouses. They do have some geographic diversification because of their Australian holdings, but in terms of sector, they're pretty concentrated.
Right, back to that eggs in one basket thing. So how does that compare to IGB and Sunway?
IGB REIT is really focused on retail, mostly with Mid-Valley Mega Mall, and Sunway REIT is more balanced, retail, hotels, offices, and some industrial. Compared to them, Axis REIT is less diversified.
So more risk for investors.
Potentially, yes, but also potentially more reward. If that sector does well, a focused portfolio can do really well. But if it struggles, it can lose more too. It depends on your risk tolerance, what you're looking for.
Okay, high risk, high reward. Got it. Last thing, management. How do they compare on that?
It's always a bit subjective, But looking at their track record, their sustainability efforts, how they manage risk, I'd say they seem pretty good. Competent, thinking about the future. They've kept their occupancy rates high, grown their portfolios strategically, and addressed potential risks.
So no major worries there.
Nothing that jumps out, no. But as always, do your own research, keep up with what's happening. Don't just trust anyone blindly, especially when it comes to your investments.
Words to live by. Okay, so we've analyzed their financials, their portfolio, their tenant mix, their management, and how they compare to the others. Have we figured out why their price has been going down?
I think we have a much better understanding of the situation now. The market, it's always trying to predict the future, It reacts not just to what's happening now, but to what it thinks might happen.
So even if they're doing well now, the market might be worried about the future.
Exactly. And that worry, that perceived risk can make the price go down, even if everything looks good on paper.
Okay, so the market's perception can really affect the price, even if the company is doing well.
Yeah, it happens all the time. Investors are always weighing the risks and the potential rewards. And sometimes those risks, even if they're just possibilities, can make people sell, and that drives the price down.
Okay, that makes sense. We've looked at Axis REITs from a lot of different angles, their strengths, their sustainability, their management team. But we've also talked about the risks and uncertainties that the market might be worried about.
Right, and that brings us back to that big question, is Axis REIT a good investment?
The question everyone wants to know the answer to.
Well, there's no easy answer. We've given you the facts, the analysis, the comparisons, but the decision is ultimately up to you.
So it's about taking all this information and making your own judgment call.
Exactly. Investing is all about weighing the evidence, assessing the risks, and making choices that align with your goals and your risk tolerance.
Okay, so we've given our listeners the tools to make an informed decision. But before we wrap up this deep dive, I think we need to talk about one more thing. Their recent private placement. How does that fit into all of this?
Yeah, the private placement, that's been a hot topic, hasn't it?
They just finished their 9th one, raising their total capital to RM 454.99 million. and the price was RM 1.71 per unit, which is interesting because that's what their units are trading at right now.
Yeah. Makes you think, doesn't it?
Some people are saying it's a good sign, like big institutional investors are willing to invest at that price. Maybe they think the units are undervalued.
Yeah, that's a valid point. Those big investors usually know what they're doing.
But other people are worried that it might actually dilute the value for the existing unit holders.
Right. That's always a risk with new shares. Dilution.
And since they did the placement at the current market price, it doesn't necessarily mean the units are undervalued.
Yeah. Private placements are usually done at a discount to the market price, to make them more attractive.
So doing it at the market price, well, it could mean a couple of things. Maybe the big investors see value in Axis REIT, even at that price. Or maybe the units aren't as undervalued as some people think.
Right. It's not clear cut.
So how do we think about this private placement, given everything else we've talked about?
Well, it's just one piece of the puzzle, right? You have to look at it alongside everything else. Their financials, their portfolio, their management, what's happening in the market.
Okay, so it's not a standalone event. It's part of a bigger picture.
Exactly. And it's up to each investor to decide how much weight they want to give it, how important it is to them.
Okay, so we've looked at the pros and cons of the private placement. Now, let's zoom out a bit and talk about the bigger trends affecting industrial REITs. We've talked about e-commerce, but there's more to it than that, right?
Yeah, definitely. The industrial REIT sector is always changing. E-commerce is still a big driver, but there are other trends and challenges emerging.
Like what?
Well, there's the whole supply chain disruption thing that's been happening globally.
Oh, right.
The pandemic really messed things up. Delays, shortages, higher costs. And that's made a lot of companies rethink how they do things. They want their supply chains to be more resilient, more diverse.
Yeah, that makes sense. They don't want to be caught off guard again.
Exactly. And this is actually creating opportunities for industrial REITs, especially the ones that focus on logistics and warehousing.
So even if e-commerce slows down, the demand for industrial space might still be there.
It's definitely a possibility, something to watch.
Okay. What else is going on in the sector?
Well, automation is a big one. Robotics, too. Companies are using more and more technology to do things more efficiently, save on labor costs. And that could change the demand for industrial real estate.
How so?
Well, if you have robots doing the work, you might need fewer people.
Right.
And that means you might need less space.
Okay, so maybe less demand for traditional warehouses.
Maybe, but it could also create demand for new types of space. Facilities designed for robots, for automation.
Interesting. So it's not just about those big warehouses anymore.
Right. Industrial REITs need to adapt, figure out how to meet the needs of these companies that are using all this new technology.
So it's all about evolving, staying ahead of the curve.
Exactly. Investors want to see that a company can adapt, be innovative.
Okay, so what does all of this mean for Axis REITs?
Well, they need to be aware of these trends. Think about how they might affect their portfolio and their future.
But it seems like they're doing that already, right? We talked about their sustainability efforts, their acquisition strategy, how they manage risk.
They are, but the question is, are they doing enough? Are they adapting fast enough to keep up with all these changes?
It's a challenge for any company in a fast-moving industry.
Definitely. And it's something investors need to think about when they're looking at Axis REITs.
Okay, so as we finish up talking about these trends, I want to bring up resilience again. We've talked about it a lot today, but it's really important, isn't it?
Yeah, it's crucial, especially for REITs.
The world is unpredictable, and being able to adapt, overcome problems, bounce back, that's more important than ever.
Resilience is how you succeed in the long term, and investors should pay attention to that.
So for Axis REITs, what are the key things that make them resilient?
There are a few things. We've talked about most of them already.
Like their sustainability efforts, their relationships with tenants, their risk management.
Exactly. Those are all important. But there are other things too, like financial strength is really important. REITs have to pay out a big chunk of their earnings to unitholders, so having strong financials is key, especially when things get tough economically. It's about being able to keep those payouts going.
Right. A lot of investors rely on those payouts for income. They need to know they can count on them.
Exactly. Strong financials give a REIT options, They can handle challenges, make acquisitions, and keep paying their investors.
So how is Axis REIT doing financially?
Well, from what we've seen, they seem to be in good shape. Their revenue and earnings have been growing, and their debt isn't too high.
That's good. But are there any potential problems we should be aware of?
Well, interest rates going up, that could be a problem. It could make it more expensive for them to pay off their debt.
Right. That's a factor for any company that has debt.
And if the economy goes down, that could affect their tenants too. Maybe they can't pay rent, and that would hurt Axis REIT's revenue.
Okay, so their financials look good now, but we need to keep an eye on things that could change that.
Right. Always good to be aware of potential problems. What else? Oh, diversification is another important part of resilience. We talked about how Axis REIT is pretty concentrated in industrial
The
properties.
eggs and basket thing.
Yeah. Focusing on logistics warehouses has worked well for them, but if that sector struggles, it could hurt them more than if they were more spread out.
So being more diverse, different types of properties, different locations, that would make them more resilient.
Generally, yes. It spreads the risk out.
But is Axis REIT likely to change their strategy that much?
Probably not completely. They've built a really strong reputation in the industrial sector.
Yeah, that's their specialty.
But they could maybe add some diversification without straying too far from what they know.
Like buying some properties in related sectors, or maybe expanding a bit geographically.
Yeah, that could be smart. They could use their expertise, but also reduce some of the risk that comes with being too concentrated.
Okay, so diversification is something to keep in mind. What else?
Well, a company's ability to adapt is really important too, being willing to change.
Right, we talked about how the industrial sector is changing with automation and those supply chain shifts.
Exactly. Being able to adjust to those changes and take advantage of new opportunities, that's how you succeed in the long run.
So is Axis REIT adaptable? Are they embracing those changes?
Well, they've shown some signs, definitely. Like incorporating ESG into their due diligence process, that's good.
And their focus on sustainability, that shows they're thinking long-term, adapting to what investors want.
Yeah, for sure. But they need to keep going, staying informed, looking for ways to be innovative.
So adapting is an ongoing thing, not just a one-time thing.
Exactly. It's about always trying to improve, being open to change.
Okay, so resilience is more than just a list of things. It's about financial strength, diversification, being adaptable, thinking ahead.
Yeah, you've got it. It's a lot of things working together, and investors need to consider all of it.
Okay, so we've looked at all the different aspects of resilience for Axis REIT. Their strengths, their sustainability, their management, how they're adapting. But we've also talked about the risks and the things the market might be worried about. Is there anything else we need to think about before we make our final assessment?
I think we've covered everything. Their financials, their portfolio, their tenants, their management, their acquisitions. We've compared them to their peers, talked about the bigger trends, and really emphasized how important resilience is.
We've done a deep dive for sure.
We have. So now the big question. Is Axis REIT a good investment?
The moment of truth.
Well, remember, there's no right or wrong answer. We've given you all the information you need, but ultimately, the decision is yours.
So what should our listeners do? Buy Axis REITs or avoid it?
Neither. Don't rush into anything. Think about everything we've discussed, your own goals, your risk tolerance. Make a decision that makes sense for you.
So do your research, think about the risks and the potential rewards, and then decide.
Exactly. There's no magic formula, no guarantees. It's about understanding the fundamentals, recognizing the risks, and making calculated decisions.
We've given our listeners the tools they need. Now it's up to them.
That's right. We've helped them become more informed investors, able to make their own choices.
And that's what this deep dive is all about.
We've covered a lot today, really explored Axis REITs and the whole industrial REIT sector.
We look at their financials, their portfolio, their management, their sustainability efforts. We analyze their tenants, their acquisitions, how they compare to the other big players.
We didn't miss anything.
But before we wrap up, I want to leave our listeners with one last question to think about.
Ooh, a cliffhanger. I like it. What's the question?
Given everything we've talked about today, all the good stuff, the potential risks, the uncertainty, does Axis REIT's current price reflect its true value?
Wow, that's a great question. It really gets to the heart of what we've been discussing.
Is the market missing something? Underestimating Axis REIT's potential? Or are there real concerns that justify the price going down?
That's the question every investor needs to ask themselves.
There's no easy answer, but we've given our listeners the information they need to figure it out for themselves.
And that's what makes investing so exciting. It's a journey of discovery, analysis, making decisions.
We've done the hard part, providing the insights and the context. Now it's up to our listeners to use their own judgment.
It's been a fascinating deep dive into Axis REIT. Really complex company, dynamic sector.
We've covered a lot, and I hope our listeners found it helpful.
Me too. It's been a great conversation.
Okay, so that's it for our deep dive into Axis REIT. We hope you found it valuable. Remember, the best investors are the ones who stay informed, do their research, and make decisions based on a solid understanding of what's going on.
Stay curious, stay engaged, and keep learning. The more you know, the better you'll be at navigating this ever-changing world of investing.
That's it for this episode. Until next time, happy investing.
It goes deeper than just looking at their balance sheet, doesn't it?
Yeah, you're right. It's about more than just numbers. It's about the whole picture, how things are doing now and what might happen in the future.
Maybe the market's getting caught up in the short-term stuff, those storm clouds we talked about, not really seeing what Axis REIT is doing to prepare.
Yeah, it's like they're getting ready for the storm, but everyone else is panicking at the first sign of wind.
Right. Maybe that's why the EPF decided to buy those shares. They see the potential that others are missing.
Yeah, that's a good point. But, this deep dive, it's not about telling you what to do. It's about giving you the information you need to decide for yourself.
Right, exactly. We've looked at the facts, compared them to the big players. Now it's your turn to decide. What are the risks? What are the potential rewards?
And that's what makes investing so interesting. It's a challenge, but it's also exciting. You have to do your research, analyze everything, and then trust your gut.
Yeah, trust your instincts. And that's what I hope you've gained from this deep dive. The confidence to make your own decisions, to understand the market, and invest in a way that makes sense for you.
So as we wrap up our look at Axis REIT, remember, there's always more to learn. Don't be afraid to dig deeper, ask questions, and think for yourself.
Yeah, and keep learning. The more you know, the better prepared you'll be.
That's it for our deep dive into Axis REIT. We hope you found it helpful.
It's been great sharing our thoughts with you.
Stay curious, stay informed, and happy investing.